Well, let's check in on the markets. Share markets were broadly firmer across Asia as a holiday in Japan removed one source of recent volatility. Analysts say that the rand is likely to take its direction this week from global data prints, including U.S. consumer inflation data due on Wednesday and South African mining, unemployment and retail sales figures due tomorrow and Wednesday. Meanwhile, in the U.S., traders will closely watch as the reports roll in after hiring slowdown in July fueled concerns about the economy and fed into a big stock market sell-off. The primary focus will be on inflation. The U.S. inflation reading will be scrutinized for clues on the Federal Reserve's policy path, while the local data releases will show whether the South African economy has gained any momentum in the middle of the year. Looking at the all-share index, it's down 0.1%, financials down 0.4%, industrials flat, resources down by 0.1%, and the rand is trading at 18.20 to the dollar, 19.88 to the euro, and 23 rand 22 to the pound. To give us more perspective on the markets, we are joined by Zwelakhe Mnguni from Benguela Fund Managers. Zwelakhe, thank you so much for your time. I mean, it was quite an interesting ride last week. It appears as though markets have calmed down a little bit, but take me through your understanding of what's going on in the JSE, seeing that it's all red across the board.
Yeah. Thank you, Nastasia. Certainly, last week was a roller coaster, and it was to some extent influenced by the technical element of guys doing carry trades through the Japanese yen. So I think we rebounded with the same ferocity. And our market today seems to be low on volume, but certainly watching or looking for direction from the big global markets, particularly the US. I think there is still a bit of fear around the market, and emerging markets are not spared from that fear.
So with that fear circulating through the market, where do you go then when things are bumpy like they are right now or they were last week?
I would say you want to be in defensive stocks. I mean, I think what one has to acknowledge is that the momentum behind the US economy is starting to wane, and that would start creating a headwind for consumer stocks, consumer discretionary in particular. So we might see a bit of a slowdown in the US economy, not necessarily a recession, that is not our base case, but certainly I think that we will see a slowdown. So you want to start positioning in some defensive sectors in the event that the economic deterioration accelerates towards the first quarter of 2025. So I'll be in defensives, but I'll also hold gold. I mean, the developments in the Middle East and Europe, Eastern Europe, are still uncomfortable. So gold has been a beneficiary from the geopolitics and potentially a rate cut from the Fed.
On that note, on Monday, when I suppose all havoc broke loose, did you hang tight or did you make any adjustments? Did you find anything to nibble on, or was it a case of let's wait and see?
We didn't trade a single share. We tend to be a lot more long-term focused. So what played out was more in line with what we were expecting, and we actually benefited from it. But we actually did relook at some positions, and we are looking to put some trades in the market in the coming days.
Let's talk Sasol for a bit. They released their trading update. Market, I saw that the share price was down about 3.3%. What did you make of this trading update? And perhaps then let's talk about, are there factors here that tend to overshadow any potential growth prospects in the, say, medium to long term?
Yeah, look, I think the numbers, if one looks at the headline earnings or looks at the operating profit in the form of EBITDA, I think you've seen that the numbers are down quite meaningfully. But I think if one looks at the overall driver, I mean, the key driver has been the fact that Sasol has become a chemicals business in the last, say, 5 to 8 years. And because of that, they are highly dependent on the chemicals prices, which peaked around 2022, and they put pressure on their margins as a result. But in terms of the numbers, the short-term numbers, I mean, there are lots of impairments. They've impaired their Lake Charles operations by quite a big number, and they've also remained under full impairment on the Secunda in the refinery. So there's a lot of noise that's taken place. But if I look at the environment and I look at the business portfolio, I don't think these numbers are that bad. I mean, they'll report probably a 35 Rand worst case, and the share price is at 126. It's not a bad place. It might be an opportunity if one takes a long-term view.
Okay, so we have Standard Bank due to release results on Thursday. What are you going to be paying attention to?
I'd like to see if the advances are growing more meaningfully. I'd also like to see if their corporate investment banking is a lot more active. And in particular, I mean, one wants to see that there is an improvement in the credit loss ratio. But broadly speaking, I think we're going to be looking for momentum in the advances in the lending activity. Although the GNU is new, I think it has turned the sentiment towards or in favor of South Africa and to some extent Africa. So we should see numbers starting to improve probably by the first quarter next year.
All right, let's leave it there, Zwelakhe. That is Zwelakhe Guni, who is from Benguela Global Fund Managers, giving us his perspective on the numbers. Of course, Sasol is going to be releasing their earnings on August 20th. That is in a week and a bit. On Thursday, we have Standard Bank, and on Monday, we have ABSA. But we'll break down all of those figures for you.